All right, guys, good morning. It is Wednesday, June 15th, and it is Fed Day. So we'll dive into some pre-market prep here, guys. I'm going to try to keep it short and sweet. Still feeling a little bit under the weather, but a pretty big day here, guys. We're going to hear from the Fed. Then keep in mind, Friday, the 17th, you've got a record amount of options set to expire this Friday. So that's probably not going to be a dull expiration. And then you've got the big one, the quarterly expiration on June 30th. Which falls on a Thursday. And then some unfortunate news, the market is closed on Monday. So a few things to keep in mind. Fed today, big expiration on Friday, market closed on Monday, and then you got quarterly expiration on the 30th. But a quick look here at the futures, the S&Ps, doesn't look like it, but they're up about 1%. The QQQ futures are up about 1 and change here. The small caps, the crowd favorite, they're up about 1%, and then Bitcoin down about 4%. So we will come back to Bitcoin. But taking a look at the market here, guys, just in terms of what the big three bars are trying to communicate, we have the red big three bar here on the daily chart. That pretty much means we're short in any bounce. Now you're up 1% this morning. This isn't exactly the bounce we're looking to short. So if you've got a sell signal on the daily chart, you got the red big three bar. Ideally, we're trying to short as close to that 21 EMA as possible. The red big three bar just tells us that the path of least resistance for that time frame is to the downside. So, being that you got the Fed coming up, being that you got a lot of people leaning short into some pretty big expirations, any kind of upside here, for conversation's sake, we rally to kind of test previous support. I think you're looking to short that bounce. We still have the sell signal here on the 4-hour chart. So a bounce to that 4-hour one, that could be shortable. But in terms of trying to see a little bit of upside in the market, in a downtrend, which we're certainly in right now, what we would have to see here is that we're getting rid of those sell signals, starting with the lower time frames. So yesterday at the close, you had the big three bars on the daily, the 4-hour, all the way down to the 15-minute. And heading into the open this morning, you got the 15-minute chart canceling out the sell signal. So that goes bearish to neutral. You got the 30-minute chart going bearish to neutral. And you got the hourly chart trying to go from bearish to neutral. So in terms of trying to get a little bit of upside here, that is a little bit of progress. But I think really, guys, keep things simple. Any bounce here, I think we're looking to put on a few shorts. But that is what I'm seeing this morning in the overall market. The daily chart is still a short. In the 4-hour chart and the 2-hour chart for the NQ here is still a short. But you do have the 15-minute, 30-minute, 1-hour trying to do a little bit of cleanup. So that is one piece of the puzzle to trying to get a little bit of a pop here. But a quick update here, guys, on a few of the uptrends. Really a few of the uptrends we've been covering for a few months here. So as far as energy goes at this point, going to be a little bit cautious. So, keep in mind this whole energy trend on a monthly chart, super extended. We're up here at like 4 or 5 ATR on the monthly chart. Then as far as the daily structure goes, no buy signal on the daily chart. Pretty much no buy signal anywhere. You've got 2 closes back under that daily 21. I think you want to be a little bit cautious. And then as you start to go through a few of the names in the group, no more buy signal on EOG on any time frame. I've got nothing on Devon. I've got nothing on Chevron. So that kind of gets ugly under the daily 50. How about Chesapeake? Well, Chesapeake gets crushed. How about Oxy? Oxy's under the daily 50. No stacked EMAs, no buy signal. So it's all getting a little bit sloppy here. I think at this point, if this is still the trend that you're looking to play higher, for now, I think you go with Valero. Valero is one of the last names in this group that still has that daily buy signal. Of course, the issue here, though, XLE really starts to unfold, break down to the downside, you're not going to see Valero buck that trend. So when you look at the EOGs and you look at the chevrons, and you look at a name like Oxy, Oxy is a really good example. As long as that daily chart has the green big 3 bar, we're pretty much looking to buy every dip. You're looking for every daily squeeze. You're looking for every 4-hour squeeze. Getting long with the green big 3 bar tends to work out pretty well. But all that kind of gets a little bit suspect here once we lose the green bar. And, in terms of some context here, guys, we get the green bar here on the daily chart when all of my criteria lines up on the weekly and the daily. So I'm looking for positively stacked EMAs. We're looking for green 10x bars. We're looking for squeezes. We're looking for price action above the 21 EMA. We're looking for like 6 or 7 things. And when the weekly chart and the daily chart have those 6 or 7 things, we get the green bar here. So obviously in the last 24 hours or 48 hours, something has changed. Might be the stacked EMAs, might be the green 10x bars. But at this point in time, the weekly chart and the daily chart no longer have that ultimate combo. No longer does everything lining up here for continuation to the upside. So I think for now, being a little bit patient on energy, pretty much making it prove itself to us, to me, that makes a little bit of sense. So I would look at XLE here and say, all right, if this is going to continue to trend higher, prove it. Let's get 2 or 3 closes back above the 21. Let's get some buy signals on a 15-minute chart. For now, my 15-minute chart is flipping bearish. So patience as far as energy goes, we're going to, as a general statement, avoid that until it cleans up a little bit. Then you got U.S. oil, which for now, I still think you got to like USO. I would prefer to buy it a little closer, just a little closer to that daily 21, but you still have the active buy signal here. So for now, no issues at U.S. oil, but just important context. This could pull all the way back to like 77. And your weekly chart is still really bullish. So it's a little extended there. So be a little bit cautious. And then you got UNG, which for me, guys, is kind of another good example. We'll see where this opens up today, 24.25. I mean, give it credit. It still tries to print the buy signal here. That probably disappears today. So looking at UNG, you get the active buy signal back in March. And pretty much this becomes the ultimate buy the dip trend. That all kind of starts to change here. So we still have the buy signal, but I think today it's probably going to turn off. I think even for natural gas, you want to be a little bit cautious. So, really to keep it simple here, if you all look at the watch list over here, and when we launch the indicator, you're going to get the bars, you're going to get the, the multi-time frame label. And then I'll show you how to write up a little something here for the watch list. But if we take yesterday's scan results and we sort them by the buy signal, it gets a little bit sad. A little bit sad. I've got 2 names on the potential buy signal watch list, and they're both kind of trash. If we instead sort by the sell signal, it's a pretty long list. So for the swing traders here, the biggest plate of opportunity, I think without a doubt, is certainly on the short side. Looking to short those bounces. So if we go through a few names here, and there's plenty to pick from. Moderna, Home Depot, TMO, Honeywell, Lowe's, ADI, Netflix. All good examples here of short the bounce candidates. One that we're watching right now, and we took a little nibble on earlier in the week, is Rivian. So to me, this is what you're looking for as far as a short goes. You got the bearish big three bars on the daily chart. We have negatively stacked EMAs in the weekly, negatively stacked EMAs on the daily, and we're under that daily 21. Pretty much the same thing as the S&Ps. The major difference, though, Rivian isn't so oversold. For a swing trader, it's tough to want to short the S&Ps down here at like minus 3 ATR. At some point, you probably get a bounce. You probably get a better short entry. So as far as a few names that you might be able to work entries in, today, tomorrow, Rivian, I think, is one of the better examples here. So we're scaling into some July expiration call credit spreads with a stop all the way up here at the daily 50. So given that plenty of room, looking for a flush into a new low. And then one more name here is Costco. So it has the same structure as pretty much everything else on the watch list. It looks like Nike. It looks like Airbnb. It looks like DoorDash. It looks like SQ. So they all have similar structures. The major difference here is Costco, a little bit closer to that daily 21. So this is the kind of thing I think you can start to scale into if we get a little bit of upside here. But ultimately, at the end of the day, if we do get that bounce into Friday's expiration, if we get a bounce into quarterly expiration, I think the easiest thing to short would just be one of the indexes. Probably trying to go with the QQQ here. But that is a game plan for now, guys. Up to this point, it's been a lot of trying to short the bounce and buy the dip. Not too much buy the dip for now. The only spot I want to buy the dip at the moment, quite frankly, is U.S. oil. I'll buy the dip in UNG if that can clean up. I'll buy the dip in energy if that can print a buy signal. So I'll jump right back into Oxy, but not until it proves itself. So be patient as far as the upside goes. Even in a few of these spots that have been pretty good trends over the last handful of months. And then I think the easiest swing trade here is going to be, if we get a rip in the market, putting on some shorts for July, August expiration. And I think the most important thing to keep in mind is we've already made a pretty big flush in terms of where we currently are, from the all-time high. But you got to be mindful of that weekly squeeze. The weekly squeeze in the S&P 500 just officially fires short this week. So eventually, or ultimately, if that works as advertised, that could give us 5 to 8 weeks of momentum to the downside. If you look at a name like Apple, which has already fallen a lot from the all-time high to where it currently is, this is only 2 weeks into a weekly squeeze firing short. So there could be another 5, 6 weeks there. You got a name like Amazon. All right, Amazon's already well into the weekly squeeze. But how about Tesla? 1240 to 600 and change. It's a 50% pullback. So Tesla's already gotten a pretty good buzz cut here, but I think you have to respect the squeeze. So pretty much the way I see it is to think that Tesla couldn't trade much lower from here is basically the same thought process as thinking that Tesla couldn't trade much higher back here. Yeah, 540 to 700 is a pretty big move. And $100 to 600 is a pretty big move. but you want to be really careful about fighting that squeeze. So all opinions aside, back here in 2021, what the weekly squeeze is trying to suggest is that Tesla's building up energy here for a 5 to 6 week push to the upside. You probably want to be a little careful getting short in front of that. Same rules apply here. And if you just flip Tesla upside down, you look at an inverse chart, you'd probably be thinking, all right, we're 1 week into the weekly squeeze firing long. We're probably going to get some follow through here. So the point I'm trying to make is, we've seen some pretty good selling, but the weekly squeezes would suggest the party's kind of just getting started. Then I think if you look at a monthly chart, which we don't look at too often together, I think even a monthly chart kind of suggests the party's just getting started. So in terms of shifting your trend, in terms of a big trend reversal, we're just finally starting to really crack through that monthly 21 EMA. So my target here, guys, for now on the S&Ps is 3,400. That takes you to your monthly 50. That kind of lines up with your weekly 200. But I think a better way to look at it is if the weekly squeeze does work as advertised, and we get that 5 to 6 to 8 weeks of nice momentum to the downside, nothing for the market to drop another 300 to 400 points here. All that being said, this is kind of a tough spot to want to short the crap out of it. So what I would like to see is some kind of short squeeze here, right? Even if it's just into Friday, then I start putting on shorts that are a little bit forgiving. What I mean by that is, say the market gets to, say by Friday we're up here at 38.50. That'd be pretty nice. But say Friday you're up here at 38.50. I think you start to scale into a forgiving short, right? What I mean by that is, if the market pops into Friday, and then you go buy next Friday expiration, 3,600 puts, that's the kind of trade where the market doesn't roll over immediately. You're pretty much, you're screwed. It's not really a forgiving trade. I think instead, if we get the bounce in the market, start scaling into some August expiration 4,000 strike call credit spreads. That's a forgiving trade. You go 2 months to expiration, scaling into an out the money call credit spread. You could kind of take some heat against you in the short term. You go deep out the money puts, you start going put debit spreads. The market keeps pumping. It gets a little bit tough to hold. So I think given that things are so oversold, and you short you put on here into the next bounce, you kind of take that scale-in approach. Out the money call credit spreads. And then I think if the market really gets ripping here, and we can get a little closer towards that daily 21, then I think we put on the aggressive shorts. Out the money, put debit spreads, things of that nature. But that is what I got for you guys heading into today's session. For now, I'm kind of good. Kind of pumping the brakes on energy, pumping the brakes on natural gas, and still open-minded to buying the dip here in U.S. oil. But more so looking to short the bounces. So, there's so many out there. Airbnb, that can catch a fade if that wants to bounce. There's Disney, active sell signal. So as bearish as it looks here, what's tough is to short it here. And then you have to sit through that rip. That rip doesn't change the trend, doesn't change the structure, doesn't even change the sell signal. But it's pretty uncomfortable to sit through. So I'd love to short Disney on a bounce. There's names like SQ. The list goes on and on. But here's what I'm going to do, guys. For those of you that follow me on Twitter, later this afternoon, I'm going to run a few scans, kind of update the watch list. And I'm going to tweet out a full watch list here of all the buy and sell signals that I'm seeing. Just make sure you're kind of watching them with the context needed. So Square's got an active sell signal. I mean, actually, Square's as bearish as possible. We got the bearish big 3 bar on a daily chart all the way down to a 15-minute. So it doesn't get much more bearish than that, but not really the spot here where you load up on a short. So a little bit of context is needed, but I'll have that on Twitter later. And I do got to be in the options room here in a few minutes, guys. So if you got any questions, throw them at me. I'll try to bang them out. And hopefully next week I get this whole COVID junk behind me. And I'll be back with a little bit of that energy. A little bit of that energy y'all are used to. Hey, good morning, Mimi. Good morning, Janice. Good morning, Sebastian. Beverly. So good question here, Lucas. Good question, Lucas. I think my first question would be, Lucas, in terms of having difficulty getting filled on your spreads, what product are you typically trading? I think for me, kind of by default, I don't really ever have too much difficulty getting filled on my spreads because of the things I'm typically trading. The S&Ps, the QQQs, Teslas, Amazons, Googles, names that tend to be very liquid. And with that liquidity tends to come really tight spreads. I'm trying to think of a good example here. What's a good example? Restoration Hardware. Funny enough. But this one comes to mind. This has been one where the options have never had the best liquidity. The spreads are really wide. The bid and ask is really wide. So that kind of makes it tough to get filled on a, call credit spread, put credit spread, really any kind of options trade when those options lack liquidity and is a really big spread. So really, Lucas, I think it comes down to what you're trading typically. The cheaper names in the market, the names that might only have, monthly expiration, those tend to be a little bit more difficult. Where an extreme example of something where you shouldn't have any issues would be something like the S&Ps or the SPX or the QQQ. A lot of liquidity there, really, really tight spreads. Usually you're getting filled almost instantly. So just make sure you're focusing on options that have good liquidity. Then you shouldn't have trouble getting filled at the midpoint, which is typically where I'm looking to get filled, right at that mid. But Lucas, if you have a few names in mind where you have difficulty, let me know and we can kind of check that out together. Hey, good morning, Mr. Walker. Good to see you. Terry, good to see you. Srini, good to see you. Yeah, Brad, I think for any swing trade, probably not a bad idea at all that we kind of get through this afternoon and see what JP's got up his sleeves. There's rumors of, there's all kinds of rumors. So we'll see what that brings here today. But yeah, I think, for me, kind of an easy decision. I don't really want to buy it up here at 1 ATR. So where are we going to open? $88? Yeah, Brad, I don't think you got to rush into it. Also, I don't want to rush into anything. It's pretty overbought on the weekly chart. That's the kind of thing I think you pursue with a little bit of patience. And yeah, Brad, I'm out of the UNG spread. It could rebound, right? But for me, it's just kind of, pulling out all the good qualities from the push that you had back here from March up until a week ago. And then just for me, kind of the realization that for now, a lot of those things are getting thrown out the window. We're not hanging out above that 21 EMA. At the open this morning, I should no longer have the buy signal. And that's been a consistent since early March. And then for those of you that have Sam's indicator, the high low pro, check out Sam's indicator on UNG. You get some pretty big momentum divergences as well. So for now, being patient on UNG, pretty much going to make it prove itself. I mean, the first step would be getting back above the daily 50. That'd be the first step there. So Jace, I would imagine 2:30 p.m. Eastern. I could be wrong, but that tends to be the typical time on the Fed Wednesday. So I would imagine that's the case today, 2:30 p.m. Eastern. Beverly, thank you. I appreciate it. No fun. It's the body aches. That's the worst part, the body aches. So Francis, regardless of account size, you can't do spreads in a cash account, unfortunately. So to do a vertical, an iron condor, call credit spread to sell options, you would have to switch over to a margin account. Or if you were the platform that allows you to have both, like I'm pretty sure Tasty, yeah, I'm sure with Tasty Trades you can have both. You might be able to with Thinkorswim, I'm not too sure. But to do credit spreads, you would have to switch over to a margin account. And Brad, we'll finish off on this note. Yeah, that I couldn't agree on more. I mean, one, the fact that we have 0 day till expiration options every day, that's pretty solid. But then with the implied volatility, you got a lot of premium here, so that can work as well. One note on the 0 day till expiration trades: if you think you got something lining up, to quote John, don't be a dick for a tick. But I think it was Monday. I had a couple bids for a 0 day till expiration trade going for both the rooms. Never got a fill. Trades would have worked out great, but one of those things where it comes like 5 cents within your entry. All right, let me hold on for the extra 5 cents. And they never give it to you. But all right, guys, I'm going to cut you loose here. For those of you in the options room, I will see you guys in about 5 or so minutes. And for those of you not in the options room, we're doing the simpler stream week. I don't believe next week, but I think the following week. I'll keep you guys posted on that. But simpler stream week is where we open up the rooms to the public. We stream that to YouTube, Facebook. So I'll keep you guys posted on that. That should be a good time. But otherwise, guys, I appreciate you sticking with me, and I will talk to you in the next one. Trade safe today.